evening. We have some amazing tax investing and wealth building strategies to go over. And if you all came here, if y'all seen the landing page when you signed up, our goal is simple. We have two goals for this class. Number one, teach you how to save at least $25,000 in taxes. And number two, teach you how to earn an extra $25,000 from investments to help you increase your net worth by $50,000 by the end of today's free class. So if an extra 50K sounds good to you, just drop 50K in the chat. If an extra 50K sounds good to you. George, what's going on, brother? How you feeling, man? Fresh cut?
Well, semi-fresh. It's still holding on. It's still holding on. Happy Sunday to everybody. Carter said it all. We're super excited to do this class on Sunday. We know some people didn't make it to church today, so we're gonna have Money Church this Sunday evening to start off the week right, so that you guys can save money on taxes and build wealth at the same time. Doesn't that sound like a good time? Tell me if that sounds like a good time. Imagine a world where you can pay less taxes and simultaneously you can build wealth. I don't know. That sounds like a party I want to be at.
1000%, 1000%. And here's the thing, bro. You know that saying that people say when people don't pay, they don't pay attention?
Mm-hmm.
Yeah, I don't know if that's true, but I believe that what we have to teach tonight is too important to leave to chance. So are you okay if we paid some people to pay attention?
I'm absolutely okay with that. I know we're competing. It's sports season. People got their favorite teams might be playing. And so look, we might have to compete with some attention.
Yeah.
But we know how important this is. So I'm 100% okay with incentivizing you guys to get this information that can transform your relationship with money.
1000%. So with that said, we're gonna do a cash giveaway at the end of today's class. So we're gonna give out, I think we agreed on $250, but we're gonna do two people. So one person gonna win 125 and another person gonna win 125. That way, me and George get to pick our individual winners, right? So we got more chances to win. So what do you have to do to enter this giveaway? A few easy things. Number one, because we can't see y'all faces, I can only see y'all name in the chat. Like I see Kat, I see Cerise Saunders, I see Lang, I see Glenn Anderson. So the more I see your name in the chat, the more I'm gonna remember your name when it's time to call on it. So that just makes my life easier. So the more I see your name in the chat, I see you, Suzanne. That's number one. Number two is our team is gonna pause the chat and then you will be able to subscribe to our YouTube channel, right? We put out two videos a week, one about investing and one about tax savings. And we want to give you more information and strategies outside of this class. So if you want to enter the win that cash giveaway, just hit that YouTube button and subscribe to the channel. And George, what they have to do for yours?
Yeah, so Carter is going to teach you about the tax savings component because we wanted you to get the money back from Uncle Sam first. Then I'm going to show you how to multiply that money. And so I'm going to be teaching second. So for me, yeah, you can maybe some of y'all might think this is petty, but to win my 125, you just got to stay to the end. Because I mean, I can't remember the last time I gave somebody money and they didn't even hear what I had to say, right? So that's all you got to do. Nothing crazy, nothing fancy. And if you want to do a personal bonus for yourself, is if you have anybody in your circle, anybody in your friend group who maybe didn't come across this a particular web class and you know they might find value in information, send them the link, right? Send them the link that you received to join today. Send them the link. Say, hey, I'm about to learn how to save money on taxes and build wealth. I think you should join because this summer when I'm living my best life, because my investments are working for me, I don't want to hear nothing, right? Because you might not be giving no money out. You might say, you know what, you had a chance to join this class. So if you want some friends of yours or family members or whoever to benefit from this information, feel free to send it out. That's just a bonus. You don't have to do it. But that's the only thing I would add to it. And other than that, to be respectful of everybody's time, I will get out of the way. Carter, the floor is yours. And let's bless the people with what they came for.
Absolutely. Let's do it, brother. Let's do it. Let's do it. Let's do it. Okay, guys. Welcome in again. Those of y'all that came in late, welcome to the Multiply Your Money Masterclass. For the next hour, y'all are my rich relatives. Okay. Y'all my rich relatives for the next hour. So I'm gonna be transparent with y'all. And I'm gonna ask y'all some questions. I just want y'all to be transparent with me as well, so we can be a family for this next hour. So, with that being said, let me ask this question because I feel like it's very important. How many of y'all have ever came to one of these free master classes or free workshops and they promised they were going to teach you something, right? But in reality, all they tried to do was like sell you something the whole time, right? They promised that they'll teach you about real estate or whatever the case, but you didn't learn anything. It was just a big sales pitch and you got no information, right? And the reason I bring that up is because it happened to me a few weeks ago and it made me so frustrated, right? Because like I understand it's free, but you still are wasting my time, and my time is valuable. It's an asset. So do me a favor, y'all. Drop drop this ain't that in the chat. Do me a favor. Drop this ain't that in the chat, okay? Because during this class, y'all gonna learn more about investing in taxes than any other free class that you went to. Like that's our promise. But in the spirit of transparency, let me say this, okay? At the end of today's class, after we giving you all some life-changing strategies, we are going to give an opportunity for a few of you all to continue learning from us. Okay. And those of you all that want to continue learning from us is going to require an investment of $2,000. Okay. Like cards on the table. But it won't be for everybody, only for the people that want to keep learning. Okay. But like that's not important because your only job is to get as much of the free information as you possibly can during this next hour. And at the end, you can decide whether you want to keep learning or not. Like everybody in this room is grown. But like we can make that decision at the end. Is that fair? Let me know if that's fair, y'all. I just like cards on the table. Ain't no I don't know why more people just can't be that transparent. Okay, cool. Well, that's what's going to happen. So let's get the learning going first. So with that being said, let's get into today's presentation. All right. So I'm going to share my screen. So who am I? My name is Carter Cofield. I am a licensed certified public accountant. I'm a CPA. I've been a CPA for almost 13 years now. Yeah, 13 years. And not only that, but I was named the number one accountant for millennial entrepreneurs, right? And not only that, they put me on the cover of the number one accounting magazine in America. Now, let me be clear. I don't show you all this to brag. I only show you all this because when it comes to learning about something as serious as taxes and the IRS, you want to make sure that you're learning from a credible source, right? So I understand that taxes can be scary, but I want to let you know that any strategy that you take from here, like it's a strategy that we've used with our clients and that we've used for ourselves. Okay. So with that being said, that's enough about me. Y'all didn't come to learn about me. Y'all came to learn about what I have to teach you about taxes. So I want to keep this transparency thing going. And so I'm gonna show you all something that I think most people would not be willing to show you. And that is a copy of my actual tax return. Because here's the thing, if I can't help myself save on taxes, how am I going to help you? Right? Like if I can't help myself save on taxes, how am I going to help you? So I'm going to show you all this copy of my tax return. All right. So when I had back in 2021, I had two businesses. One business did about $270,000 in income. The other business did about $540,000 in income. So combined, we did a little bit over $800,000 in income. Okay. Now that's great. Small problem. If you make $800,000 living in America, you got to pay this thing called taxes. Okay. And you would be facing a tax bill to the tune of $307,000. Like, can y'all imagine cutting somebody a check for $300,000 that didn't help you make the money? Right? So here's the thing, though. Here's the thing. The good news is we didn't pay $300,000 in taxes. The better news is when we filed taxes, this was the result. We owed the state of Illinois $4,238, but we got a federal tax refund of $14,586, right? We got a federal tax refund of $14,586. Now, some of y'all are asking a very important question, and the question is this. The question is, how is that possible? Right? The question is, how is this possible? And the answer is simple. The answer is, once you learn the rules of the tax game, you can start to win the tax game. It's as simple as that. Once you learn the rules of the game, you can start to win the game. And my goal with this presentation is to teach you the rules of the game so that you can win the game. Okay? So let's get into the rules. So, all right. So the first rule you have to learn is that it's not about how much money you make, it's about how you make your money. Or better said, how you make your money is more important than how much money you make. So what do I mean by that? Well, let me ask you all a question. Who in this room is a W-2 employee? Like drop W-2 in the chat. If you don't have any real estate, if you don't have any investments, and you're strictly a W-2 employee, okay? Let me show you how taxes work for you. Okay. All my W-2 employees, you earn money, right? You earn money first, and then you pay taxes second. You got to pay federal tax, state tax, and self-employment tax. So you got to pay three types of taxes. And then after you pay your taxes, then you get to keep what's left. But you don't really get to keep what's left because now you got to pay bills and all these things. Like, and you wonder why it doesn't feel like you have that much money to invest because you're giving away your money first. Now, let me show you how taxes work for business owners. Okay. Do me a favor, drop LLC in the chat if you have an LLC, drop S Corp in the chat if you have an S Corp, drop investor in the chat if you're an investor. Let me show you how taxes work for you. Okay. So for us business owners and investors, taxes work differently. We make money first, and then guess what? Then we get to spend our money second on tax deductible items like our rent, like our car payments, like our insurance, like our travel. So we make money first, then we spend money on tax deductible items, and then guess what? And then we pay taxes last. But here's the thing, y'all. Here's the thing. Not only do we pay taxes last, y'all, but guess what? We're going to make sure that we implement tax planning strategies throughout the year. So at the end of the year, we don't have any taxable income left to pay taxes on. Is that making sense? So not only do we pay taxes last, we're going to make sure at the end of the year, we don't have any net income left to pay taxes on by implementing tax strategy. And that's the difference between the wealthy and the middle class. So now let's talk about, now that you understand what to do, let's understand how we do it. So how do we implement the tax planning strategies? Well, there are three levels to tax saving strategies. There's tax deduction strategies, there's income shifting strategies, and then there is depreciation strategies, okay? And guess what? If you implement all three, the IRS will allow you to live tax-free. Okay. If you implement all three, you can easily live tax free. So let's break this down. Okay. Let's talk about level one. Level one, tax deduction strategies. How does this work? Well, this is IRS code section 162A. Okay. This is the only IRS code section I will ask you to remember. And it states allows a deduction for all of the ordinary and necessary expenses paid or incurred during the taxable year in a carrying trade or business. What does that mean in English? Okay. It means that if I have a business or if I'm an investor, any expense that is ordinary and necessary to operate my business, that expense is tax deductible to me, the business owner. Okay. So let's do some examples so I can make sure y'all follow, right? Let's do some examples. Okay. So if I have a business and if I'm using my cell phone, if I'm using my cell phone to operate my business, if I'm using my cell phone to call my customers, if I'm using my cell phone to call my team, would my cell phone count as ordinary and necessary to operate my business? Let me know in the chat. Will my cell phone count as ordinary and necessary to operate my business? Absolutely. So guess what? I'll be allowed to write off a portion of my cell phone and a portion of my cell phone bill. Why only a portion? Because if I'm using something for both business and personal, I only can write off the business use associated with that asset. So if I'm using my cell phone 80% business, 20% personal, I can write off 80% of my cell phone bill and my cell phone. Okay. Now, what about this MacBook, right? I use this MacBook 100% for business. So would this MacBook be tax deductible to me, the business owner or the investor? Absolutely, because I use 100% business use, I can write off 100% of it. Now, let me ask you this last question. What about the internet? What about the internet in my home? Absolutely right. I get to write off a portion, right? Because if I can't use my computer without internet. So whatever portion I use my internet is the portion I can write off of my taxes, right? And like some of y'all, I see the chat going crazy right now because some of y'all are having the same epiphany right now that I had 13 years ago. And the epiphany is this. I said, wait a minute. You mean to tell me that most of my personal expenses immediately become tax deductible business expenses the moment I start the business? I said, wait a minute, you mean to tell me most of my personal expenses, things I'm already paying for, immediately become tax deductible business expenses once I start the business, right? So what do y'all think I did? I started the business so I can take advantage of the tax code, right? Like, and it doesn't just stop here, y'all. It doesn't just stop here. Like this is a list of just some of the deductions that you can take as a business owner, right? This is a small list. There are over 400 different tax deductible expenses that you can take once you have a business. 90% of business owners don't understand the deduction they're entitled to, therefore they miss out on the deductions. Okay? But because you came to this class, that is not going to be you. Okay? That's level one, right? Tax deduction strategies. Now let's talk about level two. Level two is what we call income shifting strategies. And that is, how do I move money off of my tax return and put it somewhere else at a lower tax rate? And we can do this with three main strategies. We can do this via private family foundations. We can do this via fiscal year management companies. And we can do this via paying your children. So these are three main income shifting strategies that we can do to move money off our tax return and put it somewhere else. And then there is level three. Level three is depreciation strategies, right? So what is depreciation? Depreciation is the IRS giving us a tax deduction today for the possibility of an asset losing value in the future. So with depreciation, the IRS gives us a tax deduction today for the possibility of an asset losing value in the future. And with Donald Trump's latest new tax bill, we have the return of 100% bonus depreciation. That means that certain assets we can buy for our business and put no money down, and we can write off 100% of the cost of the asset, even if we financed it. So guys, depreciation strategies work in three main ways. We're able to use them for vehicles, we're able to use them for real estate, and we're able to use them for equipment for our business. Okay? Now, those are the three levels of the tax-free wealth framework, right? Now, here's my question. If I only had time to dive deep on one of the levels of the tax-free wealth framework, which level would you want me to dive deep on? Would you like me to dive deep on tax deduction strategies? Would you like me to dive deep on income shifting strategies? Or would you like me to dive deep on depreciation strategies? Let me know in the chat. Level two, level one, level two, level two, level three. It's pretty split, guys. It's pretty split. Okay. Well, here's what I'm thinking. Would it be helpful if I walked you all through a real client case study on how we implemented all three levels of the tax-free wealth framework, and we were able to help him shelter over $100,000 from taxes? Would that be helpful? A wise man told me, why have either or when you can have both and, okay? So we're gonna talk about all three levels of the tax-free wealth framework, okay? So stop sharing my screen, and I'm gonna share my iPad, and then we're gonna go through this case study together. Okay, so a client came to us and he had net income of $100,000 in his business, right? So income minus all the deductions that he knew about, he still had $100,000 in net income. And if you have $100,000 in net income as a business owner, you have to pay FICA tax, state tax, and federal tax. So all those taxes combined is going to be about 30%, which means that he was facing a $30,000 tax bill. Okay, which means that he was facing a $30,000 tax bill. All right. Now, that's too much. At least that's what I thought. I'm like, that's too much. That's the 30% of your money is too much. So he came to us. He said, "Is there anything that you can do to help lower my tax bill?" We said, "Absolutely. We can implement the tax-free wealth framework to help you minimize your taxes." So one of the first things that we did is we reviewed some of his personal expenses, and we noticed that he had spent a lot of money on travel, right? And like we believe, I love traveling everybody else. But at our firm, we don't believe in taking personal trips because the IRS clearly states that we can turn any personal trip to a tax deductible business trip by finding business activity in the location that we're traveling to, right? So the question is, how do we find business activity in the location that we're traveling to? There's two easy ways. The first way is if you're traveling to a new city, the question is, do you have any clients in that city, or do you have any business partners or entrepreneur friends in that city? If you do, invite one of your clients or your entrepreneur friends out to lunch. Okay. If y'all talk business at the lunch table, that is a business meal. And as long as we keep the receipt for documentation talked about right now, what we talked about for business, that business meal, that business lunch, guess what? It counts for business activity for the entire day. Okay. So now we found business activity from one of the days. What else can we do to find business activity? Well, you can go to a website called eventbrite.com, or you can go to a website called meetup.com. What are these websites? These websites have hundreds of different networking events every single day in different cities in your industry. So if you're in real estate, you can find a real estate networking event on meetup.com, buy a ticket to the event. Some of them are free, by the way. You keep your receipt for documentation, go to the event, shake hands, kiss babies, and get out of there. And that counts as business activity for the entire day. And guess what? If you find business activity on the weekdays that you're traveling, the IRS doesn't care what you do over the weekends. You can sip margaritas on the beach, but 100% of this trip will now, that was a personal trip, will now be a tax deductible business trip. So now we can write off 100% of our flights there and back. We can write off 100% of our lodging or our hotel for all the nights we're there. And 50% of our meals are also deductible. So we just turn a 100% personal trip to a 100% tax deductible business trip. Okay. So by doing this, we were able to help this client increase his business travel deductions by $10,000, right? How many of you all are going to use this strategy to turn your personal trips into tax deductible business trips? The holidays are around the corner, right? Okay, cool. So that was number one. The second thing we want to talk about is we wanted to help turn his largest expense into a tax deduction. We wanted to help turn his largest expense to a tax deduction. And most people's largest expense is their rent or their mortgage. So he asked us, he said, there's no way I can write off my rent on my mortgage on my taxes, right? And we said, wrong, right? As a matter of fact, there are actually two ways for you to write off your rent or your mortgage on your taxes. There is the Augusta rule, and then there's the home office deduction, right? So for sake of time today, I'll just talk about the home office deduction, okay? Really easy to understand. To qualify for the home office deduction, only two things need to be true. Number one, you need to have a business or be an investor. And number two, you need to have a dedicated place in your home where you solely work, right? I'm teaching this class right now live from my home office, right? Okay, so now that you have a business, that you have a home office, how do you calculate it? Well, the IRS says you need to calculate the space that you're using and divide it by the square footage of the home. So you take the square footage of the space and divide it by the square footage of the home. So we asked the client, what's the square footage? And he said, for which office? He said, I use the secondary bedroom as my home office, but my spouse uses the basement as her office to shoot content for her business. He said, which home office should we take? What do y'all think I told him? He said, which home office should we take? What do y'all think I told him? I said, both of them. The IRS does not limit how many home offices you can have. So we actually were able to add the space from the basement to the space in his secondary office, and 30% of his home was being used for his business. What does that mean? That means that we can right now write off 30% of the living expenses associated with living at the home. So if his rent was 4,000, if his rent plus utilities was $4,000 a month, 4,000 times 30%, that's $1,200 per month. 1,200 times 12, that's a $14,400 tax deduction for working from home. And like what breaks my heart about this is like some of y'all have been working from home since COVID, right? And that means you've been missing out on this deduction for the last 5 years. That's crazy, right? So we were able to help him increase his home office deduction and write off his mortgage and get another $14,500 deduction for work from home. Okay. Now, the next thing is let's talk about vehicles. Okay. Let's talk about vehicles. So, this person was told by his previous CPA that he could not write off his vehicle in his business because his vehicle was not in his business name. And if anybody else in the room has been told that you can't write off your business vehicle because your vehicle is not in your business name, that is false. Okay. The IRS is not concerned about whose name the vehicle is in. What the IRS is concerned about is how the vehicle is used. Do you use this vehicle at least 50% or more for business use? If that is the case, you can write off all expenses associated with this vehicle. Expenses like interest on your car note, gas, repairs, maintenance, oil changes, parking, car washes, car details, gasoline, all expenses associated with your vehicle are now deductible, including depreciation, right? And what most people don't know is whether your vehicle weighs over 6,000 pounds or whether your vehicle weighs less than 6,000 pounds. Everyone that has a business vehicle, your first year and the first year you put your vehicle into service, you are able to take a depreciation deduction of $20,200 in depreciation alone, right? So whether your car weighs over 6,000 pounds or less than 6,000 pounds, you get a $20,000 tax deduction for depreciation via 179, right? So this client didn't know that. So we were able to increase his deductions by over $20,000 for using his vehicle. Okay, so now let's go on to the next one, y'all. Let's go on to the next one because this is one of my favorite questions to ask. This is one of my favorite questions to ask. Now we talked rent, we talked travel, we talked vehicles. Let's talk education, right? Let's talk education. Is education tax deductible? Is education tax deductible? The answer is it depends. The answer is it depends. What do I mean by it depends? Well, we've been taught by society that it is almost mandatory to go to college and pay $100,000 for tuition to learn from somebody who is not doing the thing that we want to do and respectfully, who is not making the money we want to make, right? We're taught that college is mandatory. We got to pay $100,000 to go to college. And guess what? College tuition is not tax deductible. Let me say that again for people in the back. College tuition is not tax deductible. You get small tax credits like the American Opportunity Credit or the Lifetime Learning Credit. But once you make over $100,000, you're phased out anyway. So you can't take the deduction. So student loans, college is not tax deductible. And they cap your student loan interest at $1,500. So you can't write that off either. But here's the crazy part. Here's the crazy part. But you mean to tell me I can go pay somebody like Tony Robbins and go to his conference to learn how to become a better business owner? You mean I can go pay somebody like Alex Hormozy who does hundreds of millions of dollars a year, and I can go pay for his coaching and go to his offices and learn how to grow and scale my business, which I did? You mean I can go pay these people who are doing the thing I want to do and who are making the money I want to make? And any money that I pay them for their coaching, any money that I pay them for their consulting, any money that I pay them for their courses is 100% tax deductible to me, the business owner. That's crazy. So the answer to the question is the right type of education is tax deductible. The question I have for you is, are you investing your money in the right type of education? And that is a question that only you can answer, okay? But this client, he had invested about $17,000 in different coaching and conferences, and he didn't know he can write it off. So we were able to increase his deductions by $17,000, okay? Now, let's talk about children really quick. I'm behind on time. We're gonna go through this fast. Okay, so this client had a son, and his son did work in his business. And so we said, okay, cool. Do you pay your son for the work that he does? He said, no. He said, no, I don't. We said, okay, well, did you realize that the IRS will allow you to pay your son up to $15,000 this year for the work he does in your business? But here's the benefits. Benefit number one, you get a write-off for the money that you pay him. So you get a $15,000 tax deduction. Here's the better news. Your son receives the money 100% tax-free. No federal tax, no state tax, no self-employment tax, no food tax, no pseudo tax, tax-free. Because the standard deduction of $15,000 is going to wipe out his income for being taxable. So now you get a $15,000 write-off and your son receives the money tax-free. This is what we call an income shifting strategy. How do we shift money out of your 30% tax bracket and move it to your son's 0% tax bracket? right? So we're able to pay his son from his business. Now, the last thing, let's talk about this. And I want y'all to write this down. The more you invest, the less you pay the IRS. Okay. The more that you invest, the less you pay the IRS. What do I mean by that? Well, as a business owner or investor, you can set up your own retirement account. My favorite retirement account to set up is what I call a solo 401k. Why do I love solo 401ks? Well, in 2025, you are able to contribute up to $23,500 per year into the solo 401k. Here's the other benefit. You get a dollar for dollar tax deduction for all the money that you contribute. So you get to invest $23,500 into this retirement account, but guess what? You also get a $23,500 tax deduction for doing so. So wait, Carter, you mean to tell me that I can save on taxes today while increasing my net worth tomorrow at the same time? That's exactly what I'm saying. We're able to minimize our taxes and increase our net worth at the same time. Okay, so let's total these up, y'all. Let's add these up. So we got travel 10,000, 14,500 for rent, vehicles 20, education 17, kids 15, investing 23,500. That means we got $100,000 worth of tax deductions, right? But wait a second, wait a second, wait a second. If we have $100,000 worth of taxable income and we have $100,000 worth of tax deductions, what does that mean? If we have $100,000 of taxable income, but $100,000 of tax deduction, what does that mean? Oh, that means we now have $0 worth of taxable income, which also means we have a $0 tax bill. So we went from having a $30,000 tax bill to having a $0 tax bill by understanding the rules of the tax game. Like I say at the beginning of my presentation, I'll say at the end, is that the once you learn the rules of the tax game, you can start to win the tax game. And now he has $30,000 of extra money to invest. And let me tell y'all this, like here's the epiphany I hope y'all are having. The easiest way for you to make more money is to figure out how to stop paying taxes. That's it. The easiest way for you to make more money today is to learn how to legally avoid paying taxes. And now that you learn how to legally shelter your money from the IRS, it's now time for you to take some of that extra money and learn how to invest. And that, ladies and gentlemen, is my time.
All right. Well, ladies and gentlemen, give it up for the Carter. If y'all learned something about taxes today that you didn't know before, drop tax free in the chat. Just for me, just so we're on the same page. Drop tax free in the chat. Okay, cool. Now, my only follow-up question to that is if you want to compound the newfound tax savings that you're going to have by investing and building wealth, drop wealth in the chat so I can get started. Okay, drop wealth in the chat so I can get this party started. Awesome. All right, so I'm going to share my screen here in a second. All right, can you guys see my screen? Drop yes. I'm gonna make it bigger. Don't worry. I just want to make sure y'all can see it. Okay, awesome. Welcome to part 2 of the Multiply Your Money Masterclass. And some of you guys may know who I am. Some of you guys may have never seen me a day in your life outside of signing up for this class. So what I want to do is provide just a little bit of credibility so you guys can understand who you're listening to. As a friendly reminder, if you haven't already, please subscribe to our YouTube channel. For those of you who want to keep the learning party going even after this masterclass. And as a friendly reminder, we're giving out $250 at the end of today's class. Only have about 30 more minutes to get through my presentation. So make sure you stick around to the end so that you can, number one, get what you came for, and number two, be eligible to get your slice of that $250 cash. All right, so I've been a financial advisor and wealth manager for 13 years. And a few years ago, Forbes reached out to me and said, hey, we love the work that you're doing. We love the impact that you're making. We actually want to make you a contributor to our platform. So if any of you have ever, heard of Forbes, which I'm sure you have, they are very selective with who they ask to be on their platform. And so I'm honored and grateful to be selected as one of those people. In addition to that, I have been ranked as one of the top 100 advisors in the nation out of about 100,000 advisors, which puts me in the top 10th of 1% of all advisors, which I'm very grateful for. And in my home state, I'm actually the number one advisor in the state, right? So again, I don't share that to flex. I don't share that to brag. I just want you guys to have confidence that who you're listening to is somebody who is credible. Because anybody on Instagram and social media nowadays, they can put top this, number one, that in their bio, and they just literally pulled it out of thin air. It hits a little bit different when it's actually from credible sources that you can't manipulate, right? All right, awesome. So let's get into today's class because my accolades mean nothing to you, right? It's just so that you guys know who you're listening to. So my class, or my part of the discussion, I'm going to be talking about the blueprint to retiring rich 3 times faster, not one, not two, but 3 times faster than traditional financial advice. I'm going to skip past this slide because I've already shared some context on my background. And before I dive in, one thing I want you guys to really grasp and take away is that the execution is on you. If it was just about information, we would all be billionaires with six packs. I'm not gonna prove it to you. By a show of virtual hands, how many of you have saw something on social media that you wanted to remember, whether it was a recipe, whether it's a workout program, whether it's a financial tip, and you saved it, right? You know, the save feature that most social media platforms have, you saved it. But if we're being honest, if we look through your saved posts, we'll find a bunch of things that you have yet to do anything with. If we're just being honest, right? There's no judgment zone. Is that a fair assessment? Okay, cool. How many of you guys have done the same thing but with screenshots? You saw something, boop, screenshot. I want to remember that. I want to do that. I want to try that. I want to buy that. But if we're being honest, if we look through your camera roll, there will be a bunch of screenshots of things we have yet to take advantage of. Yes or no? Okay, last one. How many of you guys utilize the notes feature on your phone and maybe there's a goal, a dream, or a to do, something that you wanted to accomplish and you jotted it down on the notes app of your phone. And then one day you randomly search for it and it was on 2 or 3 different notes because you have written it down multiple times. Anybody? Like, oh shoot, I done written that down three times already and I ain't did nothing with it yet. Cool. Why do I bring this up? Number one, first thing I want you to know is if I'm saying it, I've been there before, right? I've been there, done that. I'm not there anymore, but I've been there before. That's the only reason why I know, right? And number two, it's not about information. It's about execution. How many of y'all don't consider yourself a jealous person? And I don't think anybody in this room is, but you've seen somebody do something that you had the idea for, and you told yourself, man, I was going to do that, and I probably could do it better than they did it. But the difference is they executed. So you got people who are less talented, less skilled, less gifted, and they did something that you were supposed to do all because you weren't obedient to what God gave you. Ooh, I didn't mean to preach, but it is Sunday, right? So how much longer are we going to go with the gifts, the wisdom, the insights that we have been given? And instead of executing, we have analysis paralysis. We wait, we act like we have more time, and we don't. But let me tell you something. We talk about investments today, right? And talk about assets. Time is the only asset that you have that you spend without knowing how much of it you have left. Let that one sink in. Time is the only asset that you have that you keep spending without knowing how much of it you have left. Right? So today, going into this new week, I want you guys to have the mentality of execution. I don't want you to take that book on vacation or when you travel with you, knowing you're not going to read it. Right? Finish the book. How many of y'all got a book y'all been holding on to for about a year, 2 years? Still ain't finished the book. See what I'm saying? Like, listen, I'm reading the room, but I'm only doing that so that we can have a wake up call and say, you know what? Now is the time for execution. But I want to stay relatable. I don't want you to think that just because I've been a wealth manager for 13 years and I've always had it figured out, because that is not the case. It's not the case. What you're looking at is a screenshot of not one, but two of my bank accounts before I became a financial advisor. Not the day before I became a financial advisor, but a little bit before I became a financial advisor. Why did I screenshot it? I screenshotted it because many of y'all probably have vision boards, right? Or some form of it. Maybe you have something saved somewhere that reminds you of all the things you want to do, all the places you want to go, right? Your dreams, your ambitions, your goals, right? How many of y'all have a never again board or a never again folder? And for me, what that is I have a save folder on my phone of all the moments, all the memories of places I never want to go back to. This was one of those moments. I logged into my online banking. I said, oh, shoot, I got 2 bank accounts under $200. I don't never want to experience this again. Matter of fact, how many of y'all ever been in a financial situation where, money got tight? And you looked around at your closet, you looked around at your house, you thought about all the things that you spent money on, and you didn't even care about the stuff no more, and you wish you didn't spend your money on it. God, if you get me out of this situation, I'll never be in this situation again. But then what happens? You get amnesia and you get close to the situation again, right? So at some point, we have to make a decision to say that I am drawing a line in the sand and that my legacy, right, that my future, that my freedom is more important than the comforts that I keep giving into. It's more important than scrolling on my phone and wasting time on social media. It's more important than binge watching a series on Netflix and telling myself I don't got time to learn a new skill to make more money. It's more important, right? At some point, we got to make that decision. And I'm asking you for today to be that time that you make that decision. All right. So now that I'm done preaching, sorry about that. How did I go from having two bank accounts under $200 to having one of several bank investment accounts? And this particular one was able to make me over $12,000 in a single day. And I did nothing. When I say did nothing, I didn't log in, right? I didn't have to log in and check it. I didn't have to look at a chart. All I had to do is understand how to own quality investments and let them do all the work for me. And that's exactly what you guys are going to learn how to do today. Okay. So can we stick around? Can we not be distracted? Can we forget who's winning the football game for a few minutes? Because I assure you, this is more important than that. Now, just for reassurance, so you know, okay, well, Georgia worked for you. How do I know it'll work for me? So what we're looking at is a few screenshots of some friends, some family members, some colleagues of mine who just let me know and keep me updated on their progress, right? Or I check in on them. So one particular client sent me a text. She said, hey, my investment account made me $4,800 without me doing the thing, right? One of my personal favorites, I knew I had a client that was retiring soon. I said, hey, what is the formal date of your retirement? She said, December 31st is my last day. I give notice on the 18th. So ready. To which I responded, retiring 25 years before traditional retirement age ain't too bad. This particular client was 40 years old at the time, right? But traditional retirement age is 65. I think now it might even be 67. And so she was retiring at 40, and now she gets to live her best life, travel the world, do all the things she wants to do, all because she followed the blueprint of what I'm going to teach you today. Right. So if you don't want that blueprint, then you can go ahead and log out now. All right. The value of anything is the amount of life you are willing to trade for it. I repeat that. The value of anything is the amount of life you're willing to trade for it. Now I'm going to do a little illustration to articulate what I mean by that. Okay. All right. So I'm going to pull up my iPad. All right. The value of anything is the amount of life you're willing to trade for. So the average American in the United States makes about $50,000. I'm sure many of y'all are blessed enough to make more than that, but so I just decided to go with the averages. Okay. Now, they don't wake up on January 1st and get $50,000 deposited into their accounts. What happens? They have to trade time to get that income. So, how much time does the average American spend working? Right? So there's 40 hours typically is a typical work week. And let's say they get 2 weeks for vacation and there's 52 weeks in a year. So that means there's 50 weeks that they're working 40 hours. My mentor told me to never do public math, but I think I'm pretty good at math. So I believe that's what, 2,000. Y'all can pull out your calculators to fact check me. That's 2,000 hours. And if we do the math on that, in order for us to get $50,000 in income, right, we got to work 2,000 hours. So we divide the amount of hours by the amount of money that we earn. And that's going to tell us what an hour of our time is worth. And in this example, it's $25, right? So whether you are a salaried employee, hourly employee, or entrepreneur, if you look at the total amount of money you make divided by the total amount of hours you work, that will give you what an hour of your time is worth. Okay. Now, again, we are trying to figure out the value, right, of anything is the amount of life you're willing to trade for. So in this example, what are we trading for? We don't just want to look up at our bank account and say, oh, wow, look at that $50,000. We have things we got to spend money on. And so I looked at what are the big three expenses? We have where we live, what we drive, and what we eat. Okay. Big three expenses. So I don't want to pick on y'all with the food. How many of y'all went out to eat today? How many of y'all went to Sunday brunch today? Say me, you went to Sunday brunch or Sunday brunch is a thing that you do, right? Okay. So I don't want to pick on food because I know some of y'all got a DoorDash or Uber Eats order on the way right now. How many of y'all got a DoorDash or Uber Eats order on the way right now, or y'all had it today or sometime this week? Right? Listen, George be knowing, okay? But it's okay. So I don't want to judge y'all. That number might be all over the place depending upon your taste level, right? So let's go with what you drive. So the average car payment in the United States is about $500. But we still got gas. Not everybody has an electric car, so average person spends about 200 bucks on gas. And this is where I wanted to be generous because I know some of y'all's car insurance, most of y'all's car insurance is probably more than $100. But you know what? I said, look, I'm not here to judge nobody's driving record, so we just gonna keep that one. We're gonna be generous on that one. So now what we'll be able to notice is that the cost of ownership of this car is $800 per month. But we don't care about how much it costs in dollars. We care about how much life we are trading in order to have the car. So how do we figure that out? If we take the total amount the car costs us per month and we divide it by what an hour of our time is worth, we can now see that the true cost of the car is 32 hours of our life, right? The true cost of the car is 32 hours of our life. So here's the big thing I want you guys to take away because this completely shifted how I treated money. Completely shifted how I treated money, right? When you look in your online banking, you look at what you spend on food, what you spend on shopping, what you spend on entertainment, what you spend on clothing, whatever it is that you spend your money on, you got to ask yourself a very important question. Very important question. Was that purchase worth the amount of life I had to trade for in order to get it? So let me ask you another question. How many of y'all drive your car 32 hours in a month? Anybody? Most people don't drive their car 32 hours. Why? How do I know? Because you get Amazon delivered, you get food delivered, you get grocery delivered, and a lot of y'all work from home. So I know you're not driving your car 32 hours in a month, right? So you mean to tell me I'm trading hours of my life for something that I'm not even getting the equal value out of? Now that hits different, right? You go into your closet, you bought all this stuff, half of it you don't wear. How many of the clothes in your closet, right, have been sitting almost all year long? Special occasion, I bought it, I wore it one time, maybe I wear it next year, right? But we traded hours of our life to own it. This is what we call the liability side of the equation. Okay? Let's transition to the asset side of the equation. All right, so we're still going to use the same person, same example. They make $25 an hour. Okay. But this time, instead of buying a liability, we're going to buy an asset. Right now, I'm using an Apple Pencil, writing on an iPad, sharing it to a MacBook. And for those of y'all who helped me out to make sure my math was right, y'all might have been using an iPhone, right? So let's just use Apple as an example of an asset that we could invest in. And to make the math simple, let's just say that a share of Apple costs $100, right? Meaning you can own a piece of Apple for $100. Okay. A share is what we call a unit of ownership. So if you thought about a company like it was a pizza, a share is a slice. Okay. Now, if I make $25 an hour, somebody tell me what happens every time I buy one share of Apple. I make $25 an hour. What happens every time I buy one share of Apple? Right? What happens is I buy back 4 hours of my life. Now, how is this different than the previous example? The previous example is every time I bought a liability, I was trading hours of my life for that purchase. Every time I buy an asset, I'm buying back my time. How does this work? Okay. The way this works is, do we believe that 5 years from now, I'm gonna just draw a little apple. Now, again, I get paid to do numbers. I get paid to count. I do not get paid to spell, and I do not get paid to draw. So if you see a typo or an ugly drawing, what I'm gonna need you to do is mind your business and move on. Okay. All right. This is an apple. So 5 years from now, do we think that Apple stock is going to be worth more than it is today or less? Right? Most people would say that it's going to be worth more. Now, 5 years from now, that car that we were just talking about. Now, remember, y'all, I don't get paid to draw, so do not judge my drawing. Because many of y'all saying, well, Georgia, that's the car that I'm gonna get. I'm not buying it. You don't got to worry about me. But how many of y'all know or think that this car 5 years from now is gonna be worth more than it is today or worth less? Many of us understand that it would be worth less. It's a depreciating asset. So, what does that mean? When we spend money on liabilities in the future, it will be worth less than it is today. When we spend money on assets, it will be worth more than it is today. So, another way of saying it is if my time is worth $25 an hour and I buy an investment, I'm essentially storing my time inside of that investment. So fast forward to those 5 years and Apple stock goes to $200 an hour, $200 a share. What does that mean? That means even if I didn't invest another dollar, instead of me buying back 4 hours of my life, right? I now have 8 hours. But what happens if I say, forget these liabilities and I start spending more money on assets or as much money as on assets as I can and less on liabilities, then I can buy back more hours of my life. Why is that important? Because if $25 is the equivalent to an hour of your life, right? The more of those $25 that you have stored up in investments means that one day soon, your investments can cover your lifestyle because they're now doing the work for you and you don't have to do the work. Y'all picking up what I'm putting down? Right? That's the reason why we invest. We don't invest because it's the smart adult thing to do. We don't invest because we just want to hedge against inflation. We're investing because we want working to become optional and we want our investments to cover our lifestyle because that is how you retire. You don't get to retire just because you turn 65. And you don't have to wait to retirement until 65. The moment that your investments can cover your lifestyle is when you can retire, which is why that client was able to retire at 40. Does that make sense? Y'all picking up what I'm putting down? Okay. And when you understand that, you'll be very mindful about how, where, and when you spend your money because every asset you own is a second, minute, hour, or year towards buying back your time. Because here's a big myth that I kind of just broke down already. Retirement is about age. Retirement has nothing to do with age. Retirement has everything to do with assets. Okay. Everything to do with assets. But what happens is most people are following what I like to call the 40, 40, 40 plan. And that's where you work 40 hours a week. You do it for 40 years of your life because most people have some type of stable income by age 25, right? So if retirement age is 65, you start working at 25, simple math, right? That's 40 years. But here's the one I really want you guys to understand. If they do everything right, they'll be able to receive $40,000 a year in retirement. Now, George, how'd you come up with that number? Well, let me know if you've ever heard anybody, any financial guru say anything like this. If you invest $400 a month into the stock market, earning 7% a year, in 30 or 40 years, you'll have $1 million at retirement. Anybody ever heard anybody say something like that before? Okay, cool. Now, here's the thing. The truth is that is mathematically correct. They are not wrong. The problem is that is way too long. How many of y'all got another 40 years to wait before you can be financially free? Another 30, another 20, right? Y'all don't have that, or you don't want to wait that long, correct? And so here's how the math shakes out. Let's say you do everything right, okay? And you have that magical $1 million number because starting at age 25, you put your $400 a month away, and now you look up at age 65, you got your $1 million, right? Cool. Well, when you get to retirement, the idea is you're no longer working, right? So that means you have to have enough money invested in order to be able to cover your lifestyle for the foreseeable future. So in order to do so, you have to be mindful about what you withdraw, right? So somebody a long time ago came up with this equation called the 4% rule. And they said that when you retire, you can safely withdraw 4% from your portfolio and you shouldn't run out of money if you withdraw 4%. Why? Because that means at the time you retire, your portfolio is probably invested conservatively, right? But you still need to beat inflation, which might be between 2 to 4%. And so, as long as you can withdraw enough money greater than inflation, and your portfolio can beat that, that's the income that you'll receive, and you won't run out of money, right? However, how many of y'all think y'all can live off $40,000 today, right? Much less 10, 20, 30 years from now. So, this is just an outdated methodology, all in all. However, my job is not to sway you one way or the other. My job is to educate you so that you know how this works. Because some of y'all might say, well, George, I can invest more than $400 a month. So what does that mean for me? If I can invest more than 400, doesn't that mean I can get to my freedom target faster? Absolutely. Right? And you can still follow this methodology if it works for you. However, I just personally believe that this might be the slow boat to China. And what I'm going to teach you in a few minutes is a way to get there faster. Somebody drop fast in the chat if you have a desire to achieve freedom faster. If you don't, it's okay. We can take this rowboat to China. Okay. And I'll show you how to do that. Now, here's how you find your freedom number. How much money do you need to live your current or desired lifestyle in retirement per month? Is it $5,000 a month, 4,000, 10,000? That's a personal number. You decide what that number is. And then once you know how much money you need per month to live your desired lifestyle, then you multiply that by the months in the year, which is 12, and that's going to give you your annual income need. Once you have 25 times your annual income, right? Then you have successfully achieved your freedom number if you decide to follow the 4% rule, right? And if you once you have that money invested, you're fine. So I'm not saying this method doesn't work. It just might not be the most efficient if you feel like you're already behind on saving for retirement. If you feel like you're ahead of the curve and you're right on track, boom, this could work. If you feel like you're a little bit behind or you want to get there faster, this might not work. Because the person who says, I'm gonna have $1 million invested, this is what it's gonna look like. That $1 million, I'm gonna be able to withdraw 40,000, and ultimately I'll be able to have $3,400 a month in income, roughly. If that's enough, then follow this blueprint, right? Now, here's something I want you guys to understand that's not a core part of my presentation, but I want you guys to walk away with a different mindset, okay? In a few minutes, we're going to talk about my investment philosophy and my investment strategy that has helped my clients achieve financial freedom 3 times faster. But before I do that, I would be remiss if I didn't tell you what was even more important than the strategy I'm about to teach you, right? And what's more important than the strategy I'm about to teach you is understanding the most important investment you can ever make is the investment in yourself. Because guess what? The greatest way to get to your freedom target faster is not investment returns, it's the amount of money that you have the ability to contribute. But guess what? If the average person makes $50,000 a year and they do everything right, they're living frugally, best case scenario, they put away 10%, right? Cool. That's $5,000 a year. That's great. But the reason why it's going to take them 30 or 40 years to get to their target is because based upon what they can contribute, they just are going to need some more time, right? Now, on the contrary, if you make twice as much as the average American, you say, you know what, I'm gonna be a good steward over my finances because I want to retire early. I'm gonna put away twice as much as the average American because I'm making twice as much. Now, guess what? Because you are making twice as much and you're putting away twice as much, you actually are able to invest 4 times more than the average American. The challenge is many of y'all are already making over $100,000, but you're not prioritizing investing that much, right? Hopefully you are, but many people aren't. That's what I found. But I wanted you guys to understand the most important investment you can make is not the returns that you're going to get, but the amount that you contribute. And the way that you can contribute more is by you becoming a person of value and the marketplace rewarding you in the form of compensation. Did y'all see the articles about Mark Zuckerberg giving out 9-figure bonuses for experts in AI? Why? Because they're valuable to the marketplace. So ask yourself, how can I become more valuable to the marketplace? And that is how I will create more value with my investments. All right. So if it's okay with you, I'm going to show you how to build a portfolio in just 5 minutes, leveraging what I like to call the Burger King investment strategy. Okay. You might be asking yourself in this very moment, what in the world does Burger King have to do with investing? Well, don't worry. I'm going to show you. McDonald's spends millions of dollars every single year deciding where they want to put the next McDonald's. Guess what? Burger King spends almost nothing deciding where they want to put the next Burger King. Why? Because Burger King understands this. It's okay to be a copycat if you copy the right cat, right? What does that mean? So if I am on my way to work and I really want now, full disclaimer, I haven't had McDonald's in over 11 years, but I'm not gonna act like I didn't used to eat it. So I used to smash some McDonald's, okay? So on my way to work, let's say I want to get the McGriddle for breakfast, right? You know how they used to put the syrup in the little pancake pat? It used to go crazy, right? But I'm in that drive-through line and it's too long and I don't want to be late for work, right? So I say, you know what? Not today. I'll just go across the street because Burger King looks like the drive-through line is a little bit shorter, and I'm just gonna get those French toast sticks. Now, again, I don't know if they still serve either one of these because I don't eat fast food like that no more, right? Now, let's say it's the same person goes back for lunch another day. They say, you know what? I didn't get the McGriddle that one morning, but for lunch, I am getting that Big Mac with the special sauce, and I'm getting some fresh fries. And the cheat code to get fresh fries was you had to ask for the fries with no salt because they don't know if you have like high blood pressure. That got to make them fresh, and that was the cheat code to getting fresh fries. Okay, and then you ask for the high C orange with light ice because if you get light ice, then you get more juice. Listen, y'all acting like y'all ain't never done these fast food hacks before, okay? I was a food influencer before the influencing was a thing. All right, now I'm in that drive-through line, but the line is too long. So what do? I go across the street and I go to Burger King and I get the flame broiled Whopper instead. So now Burger King is winning all because they were in the right place at the right time, right? They're in the right place at the right time and they copied the right cat. So how can you do the same thing when it comes to your investing strategy? So what we're looking at right now is Vanguard Total International Stock ETF. What in the world is that? What is an ETF? So an ETF is kind of like your favorite mall. Your favorite mall has hundreds of stores, right? And you know how you have some like the little kiosks that try to sell you like the lotions and the potions in the middle of the mall, and you try to like put your head down, right, and act like you on your phone so they don't bother you. And you have some stores that just aren't that popular, and maybe they're not doing as well. An ETF could be the same way. The same way the mall has hundreds of stores, an ETF can have hundreds of different companies inside the ETF. But guess what? If a handful of the stores in the mall aren't doing that well, does anybody think that the mall is going to close down? Anybody think the mall going to close down? By show of virtual hands? Don't think so, right? Cool. Now, an ETF is the same way. If some of the individual investments inside of the ETF aren't performing well, the ETF is going to be just fine. Not to mention, the fund manager is going to replace some of those low performers if they continue to not perform. But guess what you got to do? All you got to do is own the whole mall. You don't have to figure out which one of the individual stores aren't going to do well. You can own the whole mall, right? And that's exactly how an ETF works. You get to own the entire ETF that has hundreds and sometimes thousands of different companies inside of it, but you don't have to figure out which of the thousand you need to choose. You just get to click the buy button for a small price of 0.05%, right? And guess what? If you would have did that on the first investing day of the year and never invested another dollar, never opened your laptop, never checked your investments, guess what? You'd be up 26% year to date. You'd be up 26% year to date if you click the buy button on the first of the year and never opened your account again. And guess what? You would be ahead of most of the talking head investment gurus online who try to overcomplicate it and make you think that investing is harder than it really is, right? Now, here's something else. Here's something else. So, did you know that if you go to this website, which is absolutely free, it will literally tell you every single investment that's inside of this ETF? Right now, this one has over 8,607 different holdings inside of this ETF. You might not have the time or acumen to research all 8,000 of these. Here's what you could do though. Cheat code. Some of y'all drop cheat code in the chat. Y'all want me to give you a cheat code. What you could do is you could take this ETF, or you could Google top performing ETFs in 2025, and you could go to ChatGPT. You could say, hey, ChatGPT, what are the top performing investments inside of this ETF? Give me a summary on it. You could do some research. You could do further research. And then when you do your research, if there are companies that you really believe in, you say, no, I think they're going to continue to do well, right? Then what you could say is you could do something what I like to call a core satellite strategy. What is a core satellite strategy? Well, let's say you have 10,000 or 100,000 to invest. 70% of your money, right, would be in this particular or whatever ETFs you choose. That will be the core of your investments, right? Safe to say if it's 70% of your money is invested, that is the core. But 10 to 30% of your money, you invest in some of those individual companies that are performing really well. Why would you do that? Imagine you go to a mall, right? And you have an Apple store and then you have like a little mom and pop store, right? Many of us know that Apple is probably one of the best performing stores in that mall. But because your ownership has to be split around all of those different companies, you're not getting the full potential as if you just owned Apple. However, if you just own Apple, right, or any individual company, it could also be a risk because if it doesn't go well, you'd have all your eggs in one basket. So how do you get the best of both worlds? Well, you own an ETF that has some of those investments inside of it, but also probably has some that aren't doing that great either. But now you're protected. Now you have what they call diversification. But then you still, with a portion of your money, own some of those companies individually. So now you get the best of both worlds. And that's the difference between an ETF and an individual stock, right? You don't want your whole portfolio to be individual stocks because you now are relying on being a world-class investor and hoping that you pick individual winners. And history has indicated that most people don't have a track record of being able to do that. But imagine being able to get the best of both worlds where you still can invest in some of those individual companies. And for some reason, if they don't perform well, it only made up a fraction of your portfolio, but 70% of your money is still diversified. Now, guess what? Me and my clients have followed this strategy for pretty much the last 10 years, right? And I'm gonna give you a snapshot of the last few years of what that has looked like for us. Okay. What that has looked like for us, if you pay attention, my portfolio is this purple line here, and these other lines are made up of other indexes and ETFs: Nasdaq, QQQ, SPY, Berkshire Hathaway, and VOO. Okay, and just for those who don't know, Berkshire Hathaway is Warren Buffett's investment fund. Now, how is it that little old George, the investment advisor for the past 13 years, who's been an investment advisor for 13 years, has found a way to consistently outperform? Right? It's because of the strategy that I just shared with you. Instead of me just being lazy and just saying, you know what, I'm only going to pick the ETF, I'm going to do some additional research. I'm going to pick some individual companies I believe have the ability to outperform. Now, again, there's no guarantee that they will outperform. Past performance does not indicate future outcome. Do your own research. This is not financial advice, right? This is me and my client's truth. It's not universal truth, but over a period of time, it has panned out well for us, right? Now, if you just did those two things, right? Invested early and often, became a person of value, invested more money, and followed a core satellite strategy, I promise you, you would do better than 90% of investors today. But I am a little extra, if you haven't gathered that yet. And so I want to give you guys some extra sauce. Like, you know how we were talking about fast food restaurants earlier? You know how you get like nuggets or something and they put like one sauce in a bag, but you got 10 nuggets? Like, what am I going to do with one sauce and I got 10 nuggets? And sometimes they even try to charge you for the extra sauce. Is it okay if I give y'all some extra sauce? Drop sauce in the comments real quick if y'all are okay with me giving y'all some extra sauce. The difference is my sauce is not sold separately, right? Drop sauce in the comments if y'all, okay, cool. I'm gonna give y'all some extra sauce. All right, so if you really want to supercharge this strategy, we need to understand something. We need to understand the difference between debt and leverage. Okay. So earlier in this presentation, I talked about the liability side of the equation, and that's when people borrow money for something they don't have the cash to pay off in full, and by the time they pay it off, they pay more in interest, right, than they originally paid for the thing. So you bought a car for $25,000, you financed it. By the time you paid it off 5 or 6 years, you end up paying $35,000, right? Now, leverage is when you also borrow money, but the difference is you're borrowing money for an asset instead of a liability, and you expect the profits that you make to be greater than the interest that you owe, right? Okay, so what does that look like? Now, we have two ways that we can do this, right? When we're trying to do it for investments. We can borrow from our investment account, or we can borrow against the value of our investment account. So if we borrow from our investment account, let's say you have $30,000 invested, right? And you say, you know what, there's something else I want to invest in. So I'm going to borrow $15,000. So now your portfolio, you're going to have $15,000 in your account. You're going to get access to $15,000. They're going to charge you a small interest fee, but you're okay with that because you've done the math and you have identified that whatever you invest in, that $15,000 is going to bring you back more money than the interest that you owe on the borrowed money, right? So you're okay with it. That's a good scenario. You still have $30,000 invested overall in two different spaces, right? And you were able to get access to the money. Now, there's something that's a little bit better than that, in my opinion, and it's when you get to borrow against the value of your portfolio. Now, this functions just like if you had a piece of real estate and it appreciated in value. You could go to the bank and say, hey, look, I bought the house for $250,000. It's now worth $400,000. I have equity. Can I get a home equity line of credit? Why would they give it to you? Because you have a house that's valued at $400,000. Of the $400,000, regardless of what you owe, you have $150,000 in equity, right? And obviously there's going to be, you now have more equity than you do liability. And so they know, hey, look, if for some reason you don't pay back this line of credit, I have an asset that I can take from you. You don't want them to take the asset, so you're going to pay them back, and they're happy to collect the interest on the money you borrow. Now, how do you win in this scenario? If you take the money and invest it in a way that's going to make you more money than the interest that they're going to charge you. You can do this exact same thing with your investment portfolio. So if you have $30,000 invested, that's 100% equity. Now with your house, you had a loan first, then you had to wait for it to appreciate. With your portfolio, it's 100% equity from day one. So let's say that they give you up to 50% of your portfolio value in a separate line of credit. So now that means I have 30,000 invested. I got a line of credit for 15,000, which means I have a total of $45,000 that I get to invest, right? And my friends, there's no credit check involved in this process. There's no application involved in this process. This is how you become your own bank, by leveraging your own assets to get access to capital to acquire more assets. That's how you become your own bank in a nutshell. So just so you guys know, I'm not pulling this out of thin air. Okay. I wanted to buy some more real estate last year. And I said, you know what? I got a few options. One, I can take the money from my bank account for the down payment. Or two, I could sell some of my investments, right, and get the money I need to go then buy the new investment. But the problem is I would have to pay capital gains and then I'm losing some of my investments. Or three, I could borrow against the value of my portfolio, right? And that would mean that my money would stay invested. I still get access to the money I need, and I use that money to then go buy a new investment. Now, what does that look like? So at the time, they were going to charge me 7.25% interest, right? My monthly projected bill is going to be about $824 a month, right? And so you might be saying to yourself, well, George, why are you okay creating a new bill for yourself and paying interest when you could just sell your investments? Well, if you bear with me, I'll show you why. So this was the portfolio that I leveraged to get access to that money. At the time, that portfolio year to date was up 65.83%, right? So let's just do the first part of the equation. So they were only going to charge me 7.25% interest to borrow the money without having to sell my investments. So you don't have to be an investment expert, but what makes more sense to you? Sell my investments that are performing at 65.83%, or keep my investments that are performing that well, and then just get a line of credit that's only going to cost me 7.25%. What makes more sense? Not to mention, I've already done the math, and if I'm willing to borrow 7.25%, it technically doesn't even have anything to do with the 65% because I'm only borrowing the money to buy another asset that I've done the math that's going to produce more income than what it's going to cost me in interest, right? This is just a bonus. And it makes no sense to sell my investments. Now, you might be asking yourself, George, why do you have a Tesla on the screen? Well, at the same time as me being interested in buying that house, I was in need of a new car. I said, you know what? Well, I'm gonna buy the house first, but I'm interested in a new car, and maybe I'll get a Tesla. Spoiler alert, I didn't end up getting the Tesla. I went in a different direction, but I was curious. I was like, I know I own Tesla stock. How much has my Tesla stock grown to? So I logged into my investment account. I said, oh, wow. My Tesla stock had grew to $57,000, but guess what? The Tesla that I wanted at the time was only $40,000, right? So you mean to tell me, even though I don't work for Tesla, I've never stepped foot in Tesla, but Tesla can buy me a Tesla because my Tesla stock is working harder for me than I have to work at my own job? Hold on. You mean to tell me all those Amazon packages that keep showing up to your doorstep every week that you can have Amazon pay for your Amazon packages if you just invested in Amazon first? You mean to tell me that iPhone 17 that isn't going to be much different than the 16, 15, or 14, but you're going to buy it anyway, that Apple could buy it for you if you just would have invested in Apple first? In school, many of us learned something called the order of operations, parentheses, exponents, multiplication, division, addition, etc., right? That was the order of operations on how to solve certain equations, math equations. The order of operations that they failed to give us is that when you make money, you don't spend it first, you invest it first. Then when you invest it, your money starts working for you. And when it works for you, it can produce income so you don't have to be the one that keeps producing it. Light bulb, right? What if they taught us that in college? What if they taught us that in high school? What if we owned these stocks way back then? What about if we got our refund check, we were investing our money here? What if we had our first job, we were taking a little bit of money and investing here? How different would our lives be today? They don't teach us that, right? They didn't teach us that. And this is what we call the power of uninterrupted interest. Why is it uninterrupted? Because you invest your money in assets that are going to grow in value. You borrow against those assets to get access to money without selling them. And then you use that borrowed money to buy more cash flow, keyword cash flow producing investments like this one. So if you remember the screenshot from a few minutes ago, right? Uh I borrowed the money in June of 2024 because I knew I was buying an investment property, right? And then I got a text from my realtor letting us know that, hey, the house is finally closed, right? Which means I could take the money that I borrowed against my own portfolio without having to go through a bank, without having to worry about all that process. And I was able to just use the money to buy the property. that now produces cash flow. Okay. So what does this look like in a nutshell as we summarize this, as we wrap this presentation up? Step one, invest in the stock market, leveraging the Burger King investment strategy that you learned today, right? Step two, borrow against the value of those assets. Step three, use that borrowed money to purchase cash flow producing assets like real estate. And then step four, you take that cash flow, you reinvest it back into your portfolio. Why? Because you now understand the more money that goes into my portfolio, the more times I can perform the strategy. The more times I can perform the strategy, the faster I can get to my freedom target faster. How many of you guys think that you'll get to your freedom target faster if you follow this blueprint instead of waiting 40 years following the 4% rule? How many of y'all think I'll get there faster? Right? And that's why I say I help my clients achieve financial independence 3 times faster than traditional financial advice. Because one, we invest the money first. Two, we borrow against it to buy cash flow producing assets. And three, we reinvest the cash flow so that money can grow and compound too. That's the three. Okay. All right, now here's where it gets fun, and here's where it gets interesting. At the end of Carter's presentation, he said, the more you invest, the less you pay the IRS. So in my example, when I bought real estate, what did I do, right? I bought the real estate, it's producing cash flow, but that doesn't mean that you're not gonna have to pay taxes, right? Because the cash flow is now passive income, but guess what? If you understand the tax code, you can take advantage of something called real estate depreciation. And there's certain deductions that you can take advantage of that will reduce or eliminate your tax bill. What does that mean? I'm still receiving the cash flow from the rental property, but because I understand taxes, I receive the money, but don't owe taxes on the money. Can I give you one even better than that? Remember, we never sold our investments, we borrowed against them. But guess what? What's another word for borrow? Loan. Guess what? The IRS does not recognize loans as income. What does that mean? That means since I never sold my investments, that's not a taxable event. So there's no capital gains. I got access to the money as if I did sell my investments, but the money was borrowed money. So I don't have to pay any taxes. And guess what? Here's the kicker. The IRS will allow me to deduct the interest that I paid on the loan. Wow. This has got to be the closest thing to legal, heavy on the legal, money laundering I've ever seen in my life. All because you just have to understand the rules of the game. Okay. And as I close out, here's what I want to share with you. Rich people do the right things. They become that person of value that I talked about a few minutes ago. They become valuable to the marketplace and earn a lot of income so they can live a desired lifestyle. But wealthy people own the right things because wealthy people understand this one premise that most people don't understand. Riches is measured in money, but wealth is measured in time. Getting to do what you want, when you want, with who you want, for however long you want to do it because you own your time, because your investments are doing the work and not you. And speaking of time, I believe that's my time for today's class. Thank you.
Come on now. Come on now. Hey, you do me a favor, y'all. Remember at the beginning of class how we told y'all this wasn't gonna be one of those classes that we act like we gonna teach you something. We told y'all go actually learn some life-changing information. Like my one question is this, have we kept our promise? Like y'all gotta let us know in the chat. Have we kept our promise? Right? And George, when you was teaching, somebody said something interesting in the chat. They were like, man, I wish I had this information 5 years ago.
Mm-hmm.
Like, how many of y'all can relate? How many of y'all wish I had this information 5 years ago, 10 years ago, 15 years ago? Like, think about it. How much like different would your life look like today if you had access to this information 15 years ago? And like, let me tell you the truth, family, like the best time to get this information, it was 15 years ago, right? But the next best time to get this information is right now. Now stands for no opportunity wasted. And if we're being real with ourselves, like some of us, we already feel like we're behind. So we literally can't afford to waste any more time. So with that being said, let me ask y'all this final question. The question is this: based on what you learned today, who in here is serious about learning more so that you can start earning more? Just drop me in the chat if you're serious about learning more so that one day very soon you can start earning more, right? I see you, Mike. I see you, Carol. I see you, Henry, Maria, Mike. Okay, well, great. So Me and George were having this conversation, and we were like, because we love teaching this class, and we were like, bro, if we can teach people this much in an hour, how much more could we teach them if we gave them the opportunity to continue learning from us, right? So I asked him, I said, all right, George, how much time would you need to go over the advanced investing strategies? Because today, we went over the basics, but how much time would you need to go over the advanced investing strategies, some of the ones that we use with our clients to help them increase their net worth by millions?
Yeah, well, I briefly touched on today the power of becoming your own bank, but I would really want to expound upon that, and how you could leverage your investments to buy cash flow producing assets like real estate, businesses that you could own but do not run. How you could also tap into the power of your retirement accounts, which most people think are locked up, but you can get access to the money tax and penalty free to supercharge these strategies and to also improve the returns of your underperforming assets. If I was going to do that, I probably would need 2.5 days, but there is one caveat, one kicker. I know today you spent the first half of class teaching, and I spent the second half of class teaching. On my day, on my time, I'm gonna need the whole time, right? Now here's the thing: you can have your own day, you can have your own time, right? But I'm more of a crock pot guy. You know what I'm saying? Slow cook. Now I'm not an air fryer type of guy. So I'm gonna need some time for my stuff to just marinate a little bit. And I just need some time. So if you're okay with that, if you're okay having your own days, I can have my own days. Now I think I can, 2.5 days, I can do what I need to be do, what I need to do. If that's cool with you.
That's fine with me, brother. That's fine with me. And if you go teach those strategies, I'll probably just teach them like the step-by-step strategy on how to pay their children for their business, how old they have to be, how to do it. I should probably also teach them how they can use the Augusta rule to get tax-free rental income from their business with their primary residence. And I'll probably finish off by teaching them how they can use real estate plus a cost seg study to wipe out all of their W-2 and small business income. So if I'm gonna teach those strategies, bro, I'll probably need 2.5, maybe even 3 days to go deep in those strategies the way I really want to. So this is what we decided to do, y'all. We decided to create an opportunity where y'all could spend not just one day with us, because that's not enough time, not just 2 days with us, because that's not enough time, not just 3 days with us, not just four. We created an opportunity where y'all can spend 5 days with us virtually so we can break down the step-by-step blueprint on how you can how you can attain tax-free wealth and reach financial freedom faster. And we're calling it our 5-day wealth workshop. Okay. This is going to be a 5-day virtual training that you could, just like you attended this training, you could attend this wealth workshop from the confines of your own home. And it is going to be October 27th through October 31st, 6 p.m. to 8 p.m. Eastern. And during these 5 days, we're going to be condensing decades into days so to help you reach your financial goals faster. And just to show you what that breakdown is going to be, this is a day-by-day breakdown. So on day one, we're going to be teaching you how to leverage LLCs, S corps, and holding companies, and how to structure your financial foundation so that you can maximize your asset protection while simultaneously minimizing your taxes. Day two, we're teaching you how to pay your children tax-free from your business and how to set up a revocable living trust structure to set your children up for generational wealth. Day three, George's going deep on investing strategies. Day four, I'm teaching you all real estate plus cost seg studies to wipe out your W-2 or business income completely. And then day five, George is teaching you how you can get access to your retirement accounts tax and penalty free during these 5 days, right? So this is a day-by-day breakdown of what you're going to be learning in this 5-day virtual wealth workshop. Now, we think that this curriculum is amazing. I see you all in the chat, so y'all think it's amazing too. Now, we got really excited about the curriculum that came up with. Like, those would be life-changing information. But we were like, if we teach these strategies, some of you all probably gonna have questions, right? Like let me know in the chat. How many of y'all had questions today off the free information that we gave, right? So we said, how valuable would it be if on top of educating you all for 5 straight days, how valuable would it be if we gave you all the ability to ask us your questions, right? Like how valuable would it be if you got to ask me your tax questions and George your personalized investing questions so you can know how these strategies benefit you? So what we decided to do is on top of the 5-day education, y'all get daily Q&A with both me and George for 5 straight days. So we'll be able to answer all of your questions throughout the week so you can see how these strategies apply to you. Okay? And so we came up with this. We thought this was an amazing opportunity. But we said, how can we take it from amazing opportunity to a no-brainer opportunity, right? So two things, right? It was like, number one, why would somebody not want to attend this? It was like, well, some people might have scheduling conflicts, a time conflict. So although we want you to show up every single day live, because that's how you get your questions answered, but if you can't make it live to one of the days, you're going to get temporary access to the recordings. So if you miss Tuesday, you will be able to rewatch that later on that day or the next morning so that you don't miss any of the information that we have for you. So you have temporary access to the recordings. And on top of that, we said again, how can we take it from an amazing opportunity to a no-brainer opportunity, right? So what we decided to do was anybody that takes advantage of this opportunity tonight and grab their ticket, you're going to get a free tax and financial analysis done by our team. Okay, so this is not done by AI. This is not done by bots. Our team of CFPs and tax strategists is going to give you a high level tax and financial analysis so you can see how these strategies can benefit you. Right? So anybody that grabs a ticket gonna get the education, the Q&A, plus the high level financial analysis so that you can get this personalized information. And last but not least, those of you all who grab your ticket tonight, we're also going to give you a bonus of not only being able to join our virtual wealth conference, but you're also going to be able to get a ticket to our in-person wealth conference in 2026. So just as a reminder of what you're going to get today, you get 5 days live with us. You get daily Q&A with both me and George for 5 days. You get temporary access to the recordings. You get a free tax and financial analysis done by our team. You get a general admission ticket to our wealth conference. And the money required to invest in this training is tax deductible. So you're going to be getting a tax deduction to learn how to enhance your tax deductions, right? That's crazy. So I seen some of you all in the chat ask a very important question. So like this sounds amazing, but what's the price? Right? And we were transparent with you all at the beginning, and we're gonna be transparent right now, right? We let you all know at the beginning to continue learning from us is gonna require an investment of $2,000. And honestly, like we think that is very reasonable. Why? Because some of you all have paid $2,000 for a course, but guess what? They never gave you access to the source. We're giving you access to the education, but we're also giving you access to the experts that created the education. So for us, we think this is like beyond reasonable. But today is Sunday, and we wanted to know if it's okay if we blessed a few of you all in this room tonight. So matter of fact, drop blessings in the chat if it's okay if we bless a few of you all in this room tonight. Okay. Well, my mentor taught me a very important lesson, and that lesson is success loves speed. And he said, Carter, you should always reward those people that take action fast. So we are going to do a fast action bonus for the first 50 people that take action tonight. Okay. Now there's hundreds of people in this room right now. So this is only going to be for the first 50. Okay. So what does it mean? Well, it means that the first 50 people that decide to take action tonight, you're not going to have to pay the $2,000 sticker price to join us for this 5-day virtual training. But what if I also told you that the first 50 people who take action tonight are not going to have to pay $1,500 to join us for this 5-day transformational training? But what if I also told you that the first 50 people are not going to have to pay $1,000 to join us for this 5-day transformational training? I see you, Nicole. Okay, this is what we're going to do. Okay, the first 50 people that take action tonight is going to get everything that we just talked about, plus the bonuses for the low investment of $300. Yo, that's crazy, right? So this we gonna do, y'all, because here there's hundreds of people in the room. This is only going to be for the first 50, okay? So if you're serious and not curious about reaching financial freedom faster and learning how to build tax-free wealth, our team is going to pause the chat and our team is going to drop the link, okay? And if you're serious about getting in this room, you need to take advantage of this opportunity now, because now stands for no opportunity wasted. And this is not an opportunity that you want to let pass you by. George, bro, I'm excited. But this opportunity is crazy.
Yeah, I'm super excited because we get the opportunity to take 5 days, shrink decades into days, take the strategies that have been proven to help our clients improve their net worth by hundreds of millions of dollars every year. This past year, that number was over $244 million in collective net worth improvement. And we get to take those strategies and we get to teach them in 5 days. Now, here's the thing. Many of y'all might be wondering, because if I were in your shoes, I'd be wondering this too. Well, what is the catch? Because I've taken courses that weren't this valuable. I didn't have access to anybody. There was no customer support even, right? So why would you guys do something like this? And that's what I want to spend just a few minutes breaking down. So we have a mission as a company. It's a part of our company mission statement. So we have to make good on it, to help 100,000 people achieve their first or next 1 million in net worth, so that we can decrease the wealth gap by $100 billion, right? That's our mission. The only problem with that is that we have no plan to serve 100,000 clients within our firm, because we provide advisory services in a one-to-one fashion. So we had to figure out, how can we still make good on our mission while not breaking our business, right? And so that's when we developed this 5-day workshop. We said, okay, wait, we can analyze the data from our top clients, and we can see what were the key strategies that got them to their result. Now, obviously, there's a bunch of other things that we do to help our clients on an ongoing basis, but what are those foundational strategies that set the trajectory? And what we can do is we can coach and teach the other people who might not be able to become our clients or might not be able to hire us, or we might not have the capacity to serve them in that way, but we can give them the information and the strategies that they can implement in order to get those results, right? Which is why we give you Q&A as well, because we don't want to just give you these strategies without your ability to ask us questions to make sure you fully understand it. Does that make sense? So this was the best of both worlds, where we can still make good on our 100,000 person mission while not breaking our business, right? And everybody wins. Now, of course, when we do these 5-day virtual wealth workshops, people always ask us, well, hey, this is great and I'm happy to learn, but what if I do want to hire you? Here's what we realize. We realize that an educated client is better, right, and more prepared than one who's not educated. So what we started doing is opening up a few slots around the same time that we do these, and this is typically one of the only ways to become a client. Because when our clients start coming in and getting results so much faster because they're educated and they're empowered because they went through this 5-day experience, it makes our advisor's job that much easier, and you guys get the results faster. So all things remaining constant, that's why we do it. Right now, I don't want you guys to take my word for it. I hope that was clear, but I don't want you guys to take my word for it. Now, Card, I don't know if you had it handy. I didn't tell you this beforehand, but do you happen to have any of the testimonials from when we did this in the past, just so they can kind of get a sense of what this experience might be like?
Yeah, I can pull it up. Yeah, I can pull it up. So, guys, yeah, we did this last year, and some of the people that were in the same seats as you all, we taught a masterclass. They came to the class. We gave them the opportunity to join this wealth workshop, and this is what they had to say about their experience in this 5-day live training. One second. All right, let me refresh it right quick.
My bad, it's my fault, y'all. I didn't prepare them.
I was saying, I stayed ready.
Wow. Best money I have spent all year, hands down. This course, this experience, because it's more than a course, paid for itself. Honestly, it paid for itself after the first night.
We got so much more than what we paid for. The information that these two men give away basically for free. I know there's a cost associated with this 5-day challenge, but you get so much more than what you pay for. It's so great that I decided to join the family for 12 months, 1 year of being coached and guided towards my dream.
George and Carter were generous with their time. They were generous with their wealth of knowledge on taxes and investing. But for me, most of all, they were generous with their hearts.
All the things that George and Carter and Dion and folks have taught us, I'm going to put to use. In fact, I'll put them to use right now. I am here on this trip with points I earned via step 5 in Carter and George's system. So if you do it, it works. And if you work it, it'll work for you.
I realized that it was truly a revolutionary financial knowledge depositing experience. You can have all of this and more if you take advantage of the Multiply Your Money Challenge.
These two guys have got it going on. They are empowering. They're amazing. They have a great team that's been put together. Invest in yourself. It's an incredible knowledge base, and you won't be sorry. Take this course.
I will be more than ready when the opportunity arises again to closely work with you guys and realize my goal of 5.3 million in net worth. This class will certainly get me there.
The biggest takeaway that I got from you guys was build your own bank. Something I've been wanting to do for the past 10 years. I just didn't know how to do it.
Sincerely think that you'll be glad that you joined the Multiply Your Money Challenge and went with the VIP experience. My whole financial future has changed because I took this challenge. Thanks.
The Melanin Money Challenge, join it. Don't hesitate. This is one of the best investments you can make in your life for you and your family and future generations. This is some generational wealth transformation that they about to give you. The game that you think you know or you thought you knew is nothing to compare to what you're about to learn.
Yeah, guys, and those are just some of the testimonies from the people that decided to join us from this 5-day virtual training. But like, look at this, guys. These are people that came on day one. People would say day one alone was worth more than the investment because so many of these strategies we weren't taught, right? Because in school, there is no classes on taxes. There's no classes on investing. In college, there's no classes on taxes. There's no classes on investing. So most of us have been robbed of the ability to get in a room to learn the strategies that are going to help build wealth for ourselves and our families. But this is your opportunity to do so, right? And we are so confident in the results that you're going to get from joining us for this 5-day virtual training. We actually decided to do something this year that we've never done in previous years. What is that? We decided that anybody who grabs a ticket, we are going to give you our 2x money back guarantee. What does this mean? This means that all you have to do is sign up and show up. And if after 5 days, if you don't feel like you got 2 times the return on your investment, we will refund you your money, no questions asked. So if you buy a ticket for $400 and you don't feel like you got $800 worth of value, we're going to give you a full refund, no questions asked. So because the way we look at it is, worst case scenario, you grab a ticket, you don't get your value, you get your money back, you go about your life. But best case scenario, you can end up like this client who got a $38,000 refund check from implementing some of the strategies that we go over during this 5-day wealth workshop. One of those strategies being, guys, did you all know that the IRS will allow you to go back up to 3 years in the past and amend tax returns that you made mistakes on? So the IRS will let you go back to last year's taxes and add back deductions that you forgot or didn't know that you can take. So with this client, we gave him the strategies. He realized he was missing out on deductions. We went back and helped him file an amended tax return for last year, and he got a $38,000 refund check. And this client did the same thing, but ended up getting a $77,241 refund check. Now, let me be very clear, y'all. I'm not promising anybody in this room that you will get a $33,000 refund check. I'm not promising anybody in this room you'll get a $77,000 refund check. But what I am promising you is this. If you do nothing, you get nothing. Because the IRS is never going to knock on your door to tell you that you overpaid them in taxes. It is up to you to plant yourself in rooms and get in the right environment to learn the strategies to get the information that can change your situation. And this is just a tax testimonials. George, I'll let you talk about the investing testimony that we got.
Yeah, so one of our clients had sent me multiple text messages, but I think I was in the middle of another meeting, so I couldn't check it immediately. And the first message that was drawn to my attention was I'm crying, because the last thing you want is a client that's texting you and they're saying they're crying, right? And so as I got caught up in the text messages, I could gather that she was crying because there were tears of joy because she realized that her money had made her $33,000, right? We set up the investment account for her. We made sure she knew what to invest in. And then she just logged in one day and she randomly realized that her money had made her $33,000 in a relatively decent period of time. And it was at that moment that it clicked for her that her money could work harder for her than she was working for it. And the reason why it was so impactful is because she's a mom and she cares so much about spending time with her kids. And she now started to see the light at the end of the tunnel that her money would be able to afford her the lifestyle so she could spend more money with more time with her kids. And the joke that we have now, because she now has over $5 million net worth, is that you have $1 million net worth for every single one of your kids. But what's crazy is at the start of this process, you didn't even believe that you were worthy of wealth. She straight up asked me, she's like, do you think that I'm ready for a financial advisor? Do you think like that's something I need to do? Nobody in my family had one. And she almost didn't decide to work with us, right? Similar to how some of you guys on this call right now thinking about, all the reasons why maybe next time, right? Maybe not this time, right? And you haven't made the decision. Now, I don't know how many spots we have left at 397, but I would encourage you, if that's you, if you're questioning if you're worthy of wealth, think like our client Ellie, right? What would have happened if she didn't make that choice to sign up for her to bet on herself, right? And the crazy thing, we didn't even plan this out. The challenge, the 5-day wealth workshop ends on Halloween, right? So guess what? What better treat to give yourself to not be scared of money no more on Halloween? You don't have to be scared about taxes. No longer got to be scared about how to invest, right? On Halloween, right? So all jokes aside, I'm really, really excited to serve you guys. This is going to be an amazing experience. And the fact that you guys can do it from the comfort of your own home. I get it. You might have something planned that week. It might not be the most convenient. Maybe you have stuff you have to do after work. But here's what I want to tell you. And I know I can't hold your hand physically, but I'm going to hold it virtually. I'm going to hold your hand while I say this. Do not be too busy to build wealth. There is nothing better. There's no place else you should be during that week than learning the strategies that you need to transform your family's relationship with money. Because guess what? Now, we're approaching the end of the year, but by the time we have this wealth workshop, that's the last window of time you have to start implementing the strategies before the years. And that's not a fear tactic, right? We have tax filing season, we have tax planning season. If you don't want to have to not know what your tax bill is going to be in 2026, based on what happened in 2025, you need time to implement those strategies. And remember, at the end of the year, we have holidays. So we did this last workshop of the year strategically to give you guys enough time to take action on what you learned. Remember what I said in the beginning of my class? Execution. Y'all agree with everything that I said about saving stuff on Instagram and not executing on it. Screenshotting stuff in your camera roll and not executing on it, right? Having stuff on your to-do list and searching your phone and realizing that you wrote it down 3 or 4 different times and haven't done nothing with it. That stops with this class, remember? So when you sign up for this 5-day wealth workshop, by the time it's over, you will have enough time to implement what you learned so that you can close out the year strong. How many people realize that the game is won in the 4th quarter, right? How many of y'all drop win in the chat if you still want to win the game of wealth before the year is out? Now, if you don't, please don't drop win. But if you want to win the game of wealth before the year is out, drop win in the chat. Okay. If that's you, I need you to click that link and sign up for this wealth workshop so that we can help you. Okay? If that's you, if it's not, I get it. You got something better to do. You want to go out on Halloween and get some candy. I get it. I don't want to interrupt your fun. But if you want to win the game of wealth before the year's out, I can assure you with every fiber of my being that this is the place you want to be. I assure you. Okay. Have you wear your costume on Friday if you want to, if that makes you feel better. But you need to be in this room. I'm convicted by that because every year when we produce our report and we see the impact of what our clients have been able to achieve, not Carter's net worth, not George's net worth, not my mom's net worth, what have we helped our clients achieve? And when it's always in the hundreds of millions, 9 zeros, I am reminded that this calling is important, and I have to let people borrow my belief until they have enough of it themselves. And if you're on the fence because of timing, if you're on the fence because you don't know if it's for you, I'm telling you right now that this is the place that you need to be, and you're here by confirmation and not coincidence. I promise you.
Yeah, 100%. By the way, your mic is all the way back there, so it's kind of hard to hear you. But
How about that?
yeah. But yeah, guys, and like here's what I want to say. Because my homie said this to me. He told me this last week, and it changed the game. He said, if you pour your wallet into your mind can fill up your wallet. He said, if you pour your wallet into your mind can fill up your wallet. He said, here's the problem. Some of us, our failure to pour is what's keeping us poor. No, let me say that again for people way in the back. He said, our failure to pour is what's keeping us poor. So a lot of us, the reason we aren't in the financial place that we want to be at is because our failure to plant a seed is what makes us fail to produce a harvest. Right? Because some of y'all are like, man, I never invested $397 in myself. Cool. Well, what you've done in the past got you your results today. If you want a different result in the future, you have to make a different decision today. And for some of y'all, that decision is understanding that you're worthy of wealth and that your financial future is more important than $400. Like, I believe in my financial future so much, I'm not gonna let this $400 stop me from becoming the wealth creator that I'm called to be. So I just want to leave you all with that nugget because I know that there's a people who are worthy of wealth in this room. Like, one of my favorite quotes is that generational curses ran in my family until they ran into me. And some of you all are meant to be that generational curse breaker for your family, the generational wealth creator for your family. But first, you have to make a decision and then allow that decision to make you, right? So our team just let us know we got one spot left. So whoever that last spot is for, go ahead and claim it. And we're going to see you in this wealth workshop here in a few weeks, right? And like George said, we have 3 months. That's it. 3 months before the end of the year to learn and implement these tax and investing strategies so we can, number one, not have a tax bill come February 15th. And number two, not be able to take that extra money and start to invest it to put ourselves in a better position next year than we were in this year. And that's all we're trying to do. Help those of you that are ready to be helped. And we're excited for those ones that joined us. As a matter of fact, before we announce the giveaway winners, so those of you all that decided to join us, can you just drop in the room in the chat? Drop in the room in the chat. Those of you all who decided to take us up on this journey and become that wealth creator for you and your family. Okay, I see you, Angie. I see you, Nicole, Brendan, Michael, Alamui, Mike, Aaron, Kia, and Taekwon, I'm sorry, Ray, A. Harrington. And the reason, look at this, y'all. Look at the chat. These are all people who decided their future was more important to them than the uncomfortability of making a decision today. Their financial future was more important to them than the uncomfortability of making a decision today. We all have that choice. We could be comfortable today and not have the future we want, or be uncomfortable today and have the future. In the great words of Les Brown, if you do what is hard, your life will be easy. But if you do what is easy, your life will be hard. We all have that choice. And shout out to y'all who decided to make the right choice and get on the road to the journey of wealth. So with that being said, I'll announce giveaway winner number one. Giveaway winner number one is Nicole DeFrancis. Nicole DeFrancis. Oh, she literally just put great webinar in the chat. Well, it's gonna get greater for you because
It only gets better. It only gets better.
It only gets better.
Like what? Yep.
Yeah.
See, that's what's showing up. That's living proof of what showing up for yourself looks like. All right, and winner number two is Taquan Williams. Taquan Williams. You are winner number two. Drop something in the chat if you're still with us. Yep. Okay, you're here. Amazing, amazing. Congratulations. And congratulations to everybody that showed up for themselves today. Congratulations for everybody that's still here. I get it. You could be doing anything you want right now. You could be watching sports. You could be relaxing. You could be binge watching something on Netflix. But you guys are a few simple choices away from transforming your relationship with money. And again, as we close out here, I just want to reiterate, this is not to say that you aren't already doing some great things with money. But if you're still here, right, there's probably some things that you want a second opinion on, probably some things that you feel like you could still learn. I know that I'm still a student. I still learn every day. That's one of my non-negotiables, one of my core values. I want to learn something new every day. And so if that's you, right, we're so excited to serve you. It's going to be an amazing virtual 5-day experience for everybody else that came. We appreciate you. Hope you enjoyed today's class and keep staying connected and tapped in until next time.
1000%. So for those of you all that still have any questions about your ticket or how to get your ticket, or if there's any tickets left, our team is going to come on and answer any questions that you may have, so that we can make sure everybody who's in the room, who wants to get in the room, can get in the room. But other than that, we'll see you all